This is Andy, your home buy guy. Yesterday, I was talking to you briefly about people who have a good job, have good credit, but they're not able to save the money they need to close when they buy a house. Today, I want to talk to you about a different situation. What do self-employed people do? Now, for many, many years, if you were self-employed, you could be a successful business person, a successful professional in the community. You could be earning a lot of money, and getting a mortgage was an unbelievable hassle for you to get a mortgage. So for example, let's say you owned a business and you were earning, in actuality, about $250,000 a year. Well, in most cases, people who own businesses like that, they're going to have an accountant, and the accountant is going to recommend that they take advantage of all the legitimate deductions that they can in order to reduce their taxable income. Well, and if you're making $250,000 a year, your taxable income is about $45,700 a year. So let's say your CPA gives you good advice and they get your taxable income down to $50,000 a year. Well, that's great, because at $50,000 a year, your taxable income, your taxes are about $5,500 a year. So your CPA has helped you to keep $40,000 of the money that you've earned. So then the next question is, well, if you do that, can you get a mortgage? Sure, you can get a mortgage. If your credit score is good, if your debt to income ratio is within the parameters, and if your loan to value, when you go to borrow the money for the house, is within the loan, within the parameters, then you can get a mortgage. The thing is, the mortgage you're going to qualify for is a mortgage that a person who's earning $50,000 a year would qualify for. Now, in my experience, most people who earn $250,000 a year are not interested in the house that a person who's earning $50,000 a year could qualify for. And the really crazy thing is, let's say in that business you have a W-2 employee, and that W-2 employee is earning $80,000 a year. That W-2 employee will be able to qualify for more house than the owner of the business could qualify for. Now, folks, this is why it's so important when you decide, I want to buy a home. And it doesn't matter whether it's your first home or whether it's the next home you want to buy when your family is getting larger, or whether it's a second home, a vacation home, or maybe an investment property. When you want to buy a home, the first thing you want to do is get connected with your lender, because there are all kinds of products out there, that products for people who are buying their first home, their next home, their investment properties, and even for people in their retirement years, their reverse mortgages. All kinds of products to help people throughout the various stages of life. So you want to get connected with your lender, because when you do that, the lender can sit down with you and figure out exactly what your situation is, and then recommend the loan products that would best help you accomplish your financial goals. Now, in the case of self-employed people, there are some great products that have come out in the last few years. We have bank statement loans. With a bank statement loan, you simply use either 1 or 2 years of bank statements, and that becomes your qualifying income in order to get a mortgage. We also have P&L loans, and that basically means that you use a profit and loss statement for 1 or 2 years. Has to be prepared. Usually, it has to be prepared by a tax preparer or a CPA, and that becomes your qualifying income to buy a home. If you happen to be a contractor and you work for one or more companies and you're paid as 1099, we have 1099 loans, where we can simply use your 1099s as the qualifying income for your mortgage. There are all kinds of products that are available for people who are self-employed. So we want to help you do that. If you'd like to learn more, follow me, contact me. I'd love to help you.